Hello everyone, today is Friday, July 9th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If it's your first time tuning into one of our videos, thanks for joining us. Thanks for being here. We break up our analysis into two parts. In part one, we look at everything that went on this week in markets, correlations, volatility, credit markets, interest rates, sector performance, all the good stuff. Pick apart everything that stands out, looks interesting or different. And then in part two, we jump into the charts. We look at those longer term trends. We try and make some sense of the big picture and how to best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into some of the takeaways, some of the highlights from this week. It was a short week, so markets were closed on Monday in observation of Independence Day. And the story, I think, of this week was really markets avoiding a crisis, right? And this is a hyperbolic way to say we had a sharp drop on Thursday of this week. We saw the VIX spike to over 20, and we saw sentiment change really quick to want to just go kind of full on bear. Here comes, here's the top. Let's pull back aggressively now. And we had that for about 4 hours into the day on Thursday, but markets ended up stabilizing, drived off of the lows, closed towards the highs of the session, and then we saw follow through into the end of the week. So it was a very sort of good stance by the bulls. We're going to talk a lot more about this in part two of this video, but I think that was an interesting moment this week, is the sudden sort of rug pull in the market and then the aggressive rebound. In terms of the bond market, I think we got some interesting action there, particularly on Friday with the aggressive sort of gap down, or, at least in some of the ETFs that are tracking the bond markets. We saw an aggressive sort of pullback off of the highs. So we're going to talk about that potential local top. And we're continuing to see really the mega cap and technology leadership in this market. So S&P, Dow Jones, all back at new highs, closing out the week at highs or all-time highs, and that continues to be where all of the love is coming from in this market. So let's continue on here with some of the stats. If we look at the 1 week numbers here, again, this was 4 days of trading because markets were closed Monday. We had 3 of the 4 indices here for the US side of things positive. We saw the Russell continue its underperformance on a relative basis. It was down 1% on the week. Everything was up marginally on the week. And we see world stocks, which are pretty much following what the Russell is doing at this point. World stocks down. So this is world stocks minus the United States. So basically everything else, all the equity markets, but minus the United States, were down this week about 0.5%. And the 1 month there is down 2%. So you can see that trend a little bit weaker on a relative basis than everything else. If we look at market internals, it was still a constructive week from the 52-week highs perspective. So our first row here, we're looking at NYSE net 52-week highs minus lows. You can see by the end of it, and actually I didn't update these numbers, so this is technically everything's shifted over. So I usually update these, but I had forgot. So this is Friday, Thursday, Wednesday, Tuesday, and then this is last Friday. So Monday, obviously markets were closed, so that was last Friday's numbers. So basically here we still saw in aggregate a pretty decent number, but definitely a slowdown, because take a look at Thursday and Friday. We're getting into, a 32 on Thursday is quite a big drop from triple digits. So the number of stocks at 52-week highs definitely pulled back. So we're going to keep an eye on this. Right now, still positive, still in the right direction, but we want to pay close attention to it. Cumulative AD line on the NYSE was net negative on the week. So we saw a good rebound here on Friday, but still overall on the week here, it was negative overall. If we look at our long-term sort of guide here for 52-week highs minus lows, we can still see the trend is intact. It is slowing down a little bit in its slope. So this is basically just measuring trend strength of the number of stocks hitting 52-week highs minus the lows. And that is what we basically want to see if we're bullish, is that the trend continues nice and healthy up and to the right. And it still is, but it is flattening just a little bit. In terms of sector performance on the week, we saw lots here in the green. So earlier in the week, or especially on Thursday, this was much more, in fact, almost all entirely red. But by Friday's close, we got a lot more sectors kind of pushing back into the green. So at the top of the list, we saw real estate, we saw utilities, and technology. That's kind of an interesting bunch that is in the top three, but that's really what was working this week. And on the downside, we saw energy down 3.5%, definitely the standout to the downside. It's been very volatile here in the energy trade. It's been up and down, kind of aggressively in the 3 to 4% weekly change numbers, or just seem to be at the top of the list or the bottom of the list every single other week. Financials were down 0.7% and communication services down 0.62%. If we take a look at correlations, there's definitely some interesting things to point out here. And remember, a couple of caveats here when we look at correlations. We're just looking at 10-day correlations on this slide, so very, very short term. And remember, just because things are correlated does not mean there has to be causation to it, right? We could just be seeing random patterns in the movement of these different asset classes. Nonetheless, it is still very interesting to track. And one of the changes that I see here very clearly is this Russell 2000 inverse correlation now to everything else, to all of the other US indices. So basically, take a look at the Russell is really just standing by itself alone on its own sort of trajectory, because it is negative 0.9 inversely correlated to the NDX, to the Nasdaq. So we're essentially seeing them not just, the Russell go sideways while the NDX goes up. I mean, we're basically seeing them just go in entirely divergent directions. One's going up, one's going pretty much straight down. So that's pretty interesting. We haven't seen an extreme inverse correlation to like this in a very, very long time. So that is, certainly speaks to rotation, or, perhaps the rotation back into technology and growth and size was just a little too divergent over the past couple of months, and it's playing catch up. Lots of different theories we could throw at the wall. Leave a comment below if you have any more concrete sort of ideas on that general relationship, but that's certainly noticeable. Take a look at ACWX here. So this is, again, international stocks, and you can see that we basically are in the same Russell 2000. ACWX are really in lockstep here, moving inverse to what the S&P, what the Nasdaq, what the Dow Jones is doing. Last but not least for interest here is the usual sort of TNX. So this is the 10-year yield. And you can see the 10-year yield is a negative 0.92 correlation to the NDX. And this is a relationship we talk a lot about. This has been driving the action. So this is not new here. And the theory here, and I think there is a pretty concrete narrative behind it, but basically, as bond yields are, or as bond prices are rallying, then we are seeing that kind of support or help or give way to Nasdaq continuing to lead. So bond prices up, Nasdaq up. And when bond prices fall and yields rise, Nasdaq has a little bit of a tougher time. So that continues to sort of play itself out, but lots of interesting sort of movements and correlations going on here that are starting to tightly couple throughout this week, throughout the past 2 weeks. If we look at volatility this week, so this is what's funny about looking at just the last data points, but we closed this week at 16.21, but what you're not seeing is on Thursday, we were up at 21. This blue line was up here, 21, 22 even, I think, is where we got in the VIX, and all of that evaporated by the end of the week, and it doesn't look all that changed from last week. So a little bit of that crisis averted intra-week here, and VIX term structure pretty much as it has been. If we look at interest rates and credit, so we saw yields basically falling this week, which means bond prices were doing well. We see investment grade high yield bonds still kind of up and healthy and in good trends. So really nothing alarming there, but certainly the yields story kind of continuing to fall is still just a trend that is happening. But of course, we are going to talk about maybe a potential low in yields later in this video. If we look at the dollar and commodities here, so it's a little bit lackluster in terms of dollar index. I mean, it was moving around, but by the end of it, it closed down just slightly. We did see gold really kind of take a stand here and move pretty independently. It was up 1.14% this week. Silver was down, Bitcoin was down, ag was down, crude oil was down, natural gas was down. So we really had just gold on the commodity side really sort of standing out. Crude oil was down much deeper earlier in the week as well, but that saw a nice rebound into the end of the week. If we look at the report card, after all was said and done, it was pretty good remarks here. We got a solid B in terms of our checklist. We had risk sectors not really outperforming like we like to see. That was a strike in equity market performance. That Russell sort of dragging things down was a little bit weak as well. So overall, give this week's action a B. In terms of our trading systems, so Merlin here, our top trading system, longer term trading system, is still very much invested in this market. Little pullbacks like we saw this week doesn't really affect Merlin. It's not looking at the very, very short-term action. We did have, I think, a stop loss, just one, I think, this week. But overall, still pretty invested in this market, not really changing its tune at this time. Lamerick here was much more agile. It basically started buying the dip into Thursday. So the sell-off that we saw on Thursday is when Lamerick started buying up new long positions, picked up things on Thursday, picked up things on Friday, and it's got some, about 50% long into the weekend, and we'll see what it does next week. So that's the way we are positioned. If you want to learn more about those trading systems, click that link appearing in the top right hand of your screen. You can sign up and get trading signals to your computer, your phone, and email, all that good stuff, and stay up to date with the systems. Learn more at that link. And with that, we'll be back in part 2 in just a moment. All right, we're back here. We've got TC 2000 open. We're looking at our equity market grid. So we got the S&P in the top left, Nasdaq top right, Russell bottom left, ACWX in the bottom right. We've got our smart trend filter built out here. This is a custom price and volume trend filter. So it measures price and volume, and it helps us determine trend and trend strength across time frames, and price itself is the white dashed lines. So we are looking at a weekly time frame here, and when we look at our weekly picture, we only had one change from last week. So this is our sort of outlook, our trend model here. You can see in the S&P 500, this has been bullish the whole time and it hasn't changed. Same thing for the Nasdaq. We last bullish transition up here was way at the beginning of June, and so we continue to be in a nice bullish kind of outlook there. The Russell has been choppy, so it's been neutral here for the past, well, mostly over the past couple of months now at this point, but it hasn't flipped down. So we haven't seen a sell signal here. We haven't seen a breakdown. So our sort of idea here, or our takeaway, is that this is still going to be a choppy market, and we are still waiting for clarification on how this range and consolidation resolves itself. If we look here at the ACWX, so international stocks, you can see we got a flip down this week. So the down week that we saw in terms of performance resulted in a neutral yellow downgrade of our trend signal. Doesn't mean that everything's going to, correct and drop 10, 20, 30, 40%. It just simply could mean that we need to chop around for some time and go sideways, consolidate, and we're going to keep an eye on that over the next week or two. If we go down to a daily chart, we look at the shorter term trends here. We do have some more mixed signals. Now, not in the S&P and the Nasdaq. You can see that even with the little mini panic here on Thursday, and this is where the trend filters sort of help, is when you do get the market sort of freaking out a little bit on these individual days, and we are, above our trend filter, we've got these green bullish outlooks here. It is usually an opportunity to kind of step in and look at the long side as path of least resistance. It's also the hardest time because, we're seeing fast moves. And on Thursday, again, that sentiment flipped pretty quick. But regardless, we did see the nice sort of follow through higher, and we just basically continued to be in a green environment here for S&P. Same thing for Nasdaq. Now, the Russell is not in the same sort of category here. So this ended up flipping down. It produced a sell signal on Thursday. So this is where things are diverging, and we are seeing those mixed signals. The Russell is a clear kind of underperformer here, and we're going to talk a little bit more about this from a price action perspective in just a moment. If we look at ACWX, there's nothing new here, right? So this was down this week, but kind of expected it to be down because this has been in a sell signal. It's been in a bearish trend since the middle of June. So this is sort of our expectation. Again, it gives us that path of least resistance expectations, and for ACWX, it's been lower. Now, let's move on over to our price action analysis. So let's take a look a little bit tighter and closer at the levels and ranges that we like to map out here to give us a better kind of understanding of what's going on from a supply demand perspective. So if we look here at the S&P 500, again, you can see the most recent sort of notable event was when the S&P 500 broke over this, call it 4,200 to 4,250 area. When it broke out above here and basically got clear skies above it, that was your breakout of a multi-month sideways consolidation. And so we were trending up, life was good. And then of course, Thursday happened. And this was, again, a pretty scary day. We saw a 1.5%, I think it was, on the open gap down. Maybe not that much. Maybe it was only 1% gap down, but it was still, a little bit scary there. And actually, yeah, I think if we're looking at the SPY, let's see what this gap down was. Yeah, 1.3%. I knew it was a little bit more than 1%. So a little bit of a panic there, a little bit of a rug pull, and we traded down throughout the session. But look at where we closed. It was much closer to the highs. And then, of course, your follow-through day on Friday was what you really needed to see there as confirmation to see if dip buyers are going to step back up, or are we going to stay concerned and worried over the weekend. We clearly saw it was the former. So now when we look here at the S&P 500, we are just back to closing at new highs, and we really have a new reference point we can use, which is essentially now Thursday's lows. We marked a nice little short-term bottom here for the S&P, and now we can kind of measure risk and map against 4290, let's call it, in the S&P 500 as our line in the sand if you're a short-term sort of trader here, tactical, trying to manage risk. So I think that's a reasonable spot now where we can sort of ratchet up our point of interest. Otherwise, there's blue skies above us here, and the trend continues higher. We just had a little bit of a shakeout. So to me, this market is just doing what it looks like it's ready to do, which is trend higher and continue to make some new highs right now. Now, if we go to the more sort of bearish, pessimistic scenario or market, it's the IWM, so the Russell 2000. Now, we talked about this here in our past couple of videos. I thought we were getting close to a breakout here. I've alluded to potentially watching this pretty closely for a resolve out of this range. I thought we were going to get it. Clearly did not happen. In fact, it went in the total opposite direction. So clearly a little too many people were sort of on that same kind of analysis there, that this was ready to break out. And when everyone's on, kind of one side of the boat, that's usually when it heads and kind of capsizes and heads in the opposite direction. So we can see now is we've got the little bit of a shakeout, and more of a violent shakeout here is a 6% move down here in about 4 days. But then we saw the aggressive sort of pop back over these levels into Friday. So the story here on a longer term basis is still just consolidating. No change in character. We're still moving sideways. From a short-term perspective, again, we can measure against this low. We're back above the mid-June low here. So that's where you definitely want to see it stay above and consolidate back up towards the upper end of this range. If we look at the Nasdaq 100, last but not least, you can see we got new closing highs as well. Didn't quite take out the prior intraday highs, but we closed at new highs. And again, you saw the same type of action here on Thursday. We got that quick rug pull. We traded down a little bit, and then we closed much closer to the highs of the session, and then got some follow through, and this uptrend is still very much intact. So that is the landscape right now. It's basically, trends are up and more of a sort of chase the mega caps and the things that are working. Again, we look at the IWM, if you go even smaller, look at something like the IWC, which is the microcap index, you can see again, things are just much more kind of turbulent, sideways, and messy for this type of stock, or this sector of the market. So that's kind of the big sort of takeaways here in terms of the U.S. markets. I mean, the VIX here, which is also very interesting, got as high as, again, 21. So what we can basically do, though, is get another little circle here at kind of the lower highs in the lower peaks here in our little kind of panic modes, right? So for the past 2 years, really, well, not 2 years, for the past 6 months to a year, we have been making lower highs here, lower panic highs in the VIX. And so we got as high as 21 this week. And then look at the very swift, kind of drop from that level all the way back down to 16 in a day's time. So that was also very, very notable here, and it is in characteristic with kind of what's been going on. And this here I think is good, right? We didn't see the VIX stay bid or stay elevated. I'd be much more concerned if the VIX was, holding above 18, 19, closer to 20 going into the weekend. That would show that there's some more, extreme kind of change of character. The fact that we just kind of roll right back over, to me, I think indicates that, things are still looking pretty good for the bull case. Doesn't mean we can't continue to see short-term volatility, but as of right now, the buyers definitely sort of stepped back in. I want to talk about bonds, and, everybody looks at the TLT for bonds. Obviously, we could look at BND is Vanguard's total bond market, but we'll stick with the TLT, the long end of the curve here. And basically, you can see I wrote at the top of this video was that a short-term top that we just saw in TLT. It's a pretty ugly gap down. It's it's always very difficult to say because this is a momentum trend to the upside here, so it's always just very difficult to make a call or to call a very quick top like this. But this definitely did take some of the wind out of this trade here. The fact that we were trading up around 149, we put in this kind of indecision bar here on Thursday, and then we saw the aggressive sort of gap down and close at the lows for TLT. So this will be interesting. Remember, TLT going up is good for Nasdaq. If we start to see this really start to accelerate lower, or make a move all the way back down to 141. Maybe it is, Q's taking a little bit of breather here after a nice run, and we maybe see the Russell 2000 move back up towards the upper end of this range. So something to consider. But TLT bonds, all those interest rates, depending on how you want to look at it, all looking kind of interesting here as a potential short-term turning point. Last but not least, I want to talk about oil USO here. We talked about this in our Wednesday trade idea videos, and we noted sort of the 3 days down. We had, let's see, this view drawn, this one right here. So we kind of broke double trend line, let's call it. So you had this like immediate trend line, but you also had this cluster of highs and lows here that it broke down below, and it looked like a pretty clean break here. Heavy volume. We said, look, this is the time to pay attention, maybe manage some risk if you need to. And lo and behold, Thursday we got the rebound or the bounce back. And this is where, if this was really weak, you'd expect this to sort of fail and roll over in, kind of somewhere in this area underneath 50. But instead we closed pretty strongly here above 50 and looking like it wants to just get back up in trend here. So tough to ignore this, and maybe we're just going to be back on track, and this was a nice little hiccup for the market as well. But clearly the violation here didn't last too long or mean too much, and we are moving higher. So let's see how this acts into early next week. So that's it in terms of major markets. Let's finish off here with some industry sector scans. So we've got these two scans built that are basically highlighting interesting sectors or industries. So industries are smaller than sectors, and let's run through a few of them now. If I sort this, we've got a handful on the real estate side, which makes sense because that was the leading sector this week, and then a handful on industrials. So the first one here is coal. So coal making a breakout here to new highs. I'm going to switch this to the weekly view. So take a look at this. Coal was consolidating just under highs, breaking out this week on heavy volume. So really ignoring the market kind of turbulence out there and closing at new highs. Restaurants we saw moving back up to new highs as well, closing at new 52-week highs. This trend is continuing, looking like it wants to move up. Household, personal products, consumer defensive sector here also just marginally new highs, trying to escape this range to the upside. Didn't quite do it, but getting close. Tools and accessories, very, very heavy volume coming in, closing at the highs here after a pullback. That's looking pretty good. Diversified industrials closing back up towards highs. Business services closing up towards highs. And then we've got a few real estate investment trusts. So the real estate sector, which is just the REIT Diversified. So I'm not really sure what goes into this. Let's take a quick peek. Oh yeah, so 102 names here. So this is the big REIT sector of the market. You can see moving up and closing at new highs. We see now specifically healthcare facilities closing at highs after a nice consolidation. We see, let's see, REIT residential. It's tough to know what the difference is between a lot of these. So this one's 22. Oh, this is just residential. Sorry, excuse me. So this is just residential REITs. So this also breaking out here and, continuing to move up. and scientific and technical instruments on the tech side of things. Let's take a look at this sector here. 34 stocks. So if I expand this list here, you can see these are some of the leading stocks in the leading groups of this week, and this would be an interesting list to sort of comb through. And last but not least is just real estate again, XLRE breaking out to new highs. So that's it. That's how the sectors fared. That's how the market fared on this very shortened week. Hopefully you guys and gals did good out there trading, managed the risk, and didn't get too spooked by the volatility on Thursday. Leave a comment below. Let me know what you're looking at, what stands out, looks interesting to you. I always love to know what everybody's looking at. And as always, I thank you for tuning in and watching these videos every week. Every Friday, we do our long form analysis like this. Do subscribe to our YouTube channel or follow us at The Trade Risk to make sure you stay up to date. Have a great weekend. See you back here next week.